Hey Chris, Jason, just wanted to do this video for you. Sorry for any of the background noise. I'm over at a coffee shop doing this. Just want to get it out to you this weekend so you can kind of have time to take care of this on the weekend. Um, so a couple things. First off, what I was going to show you was to be able to show from RTH, regular training hours, to extended. Right here, it'll say show extended. If you don't want extended, if you just want from market open to close, just uncheck this box, and that's under style and then there. So it's going to come on this chart. So what you'll want to do is save the chart, and I'll walk you through this whole thing too. So to save a chart with the studies, go to Style, Share Chart, okay? And then what you'll see is a link. Just copy this link, click a copy or Control C, okay? And then what you'll want to do is come over here, go to Setup on your chart. I'm going to email you this link, okay? So what you'll want to do is go open up your Thinkorswim in your paper account. Go to Setup, Open Shared Items, and then just to copy and paste. So Control V, click on Preview, and then Open. You're going to have a new window that's going to open, okay? And then from here, you're going to have the same exact chart with all the same settings that I have, just everything, okay? If you go into Studies, you'll want to go to Study, Edit Studies, and you're going to have these four, in here, these four codes, okay? They'll probably come out saying shared, whatever, shared under dash AAA. Just come in here, click on that, and just take out everything and just rename these whatever you want, okay? So real quick, the first one is the double moving average cloud, which is this cloud right here, the 821 double moving average. The second one is RSI divergent candles, okay? The third one are the upper dots, and then the fourth one is divergence, okay? And one more thing, when you save these, go into studies, right? You can edit, just click on save as default, the way everything is, and you should save them all exactly the way they need to be saved. So once you've done that for all these, okay, you're going to have the chart, okay, and I'm going to walk over. So these dots are going to be identical to all these dots. What I did, yeah, so you'll see a dot here, that matches up here, one here, that matches here, so on, right? What these dots are is these dots are divergence dots, okay? Is you could see there's divergence from here to here. There's a dot, and you could see divergence from here to here. Okay, and you'll see them over and over and over. Okay, so here you have a divergence. Also, there's also another code inside these lane divergence dots that don't always show the divergence outside, but there's something happening under with price action too. So you're not always going to see the divergence like you did here, because you actually have clear divergence, but you have a red dot, and what happens is price falls. Okay, these green candles right here are part of the code to where when the RVI, which is this code down here, very similar to the RSI, but it gives a lot better looking codes. When this gets below 87 to 95, these candles start to get painted green. When they get above 80, on the way down is below 13 to 5, okay, way oversold, they start to turn green. Once they get back above, they turn back to the regular color. Okay, so you get way oversold, green candles. That's just kind of letting you know, hey, this market's way oversold. On the upside, when the price gets above 87, it'll actually paint them green. If it gets above 95 to 100 or below 5 to 0, it'll paint the candles white. And usually those are just go short because the market is just way, way overbought or oversold. So I hope that helps. What those are. And then you have these turquoise arrows and the purple arrows. These are showing you divergence, another type of divergence. It's kind of like a buy signal, just like the dots. As you can see with the dots, okay, as you can see with the dots, they nail the highs, right? Boom. Right here, a low, right? Nice divergence up here, nice divergence, double top, but you actually have divergence here, okay? These guys, when they get oversold, right, you want to look for divergence. You kind of have divergence here, right? Because you have a double bottom versus lower lows, right? So when you see price making new lows, maybe look for the divergence and look for maybe a dot or an arrow. You kind of see it here too on the bigger picture, right? You actually have a higher low, but you have a dot, everything, and then nailed the low. Down here, same exact thing. You have a little divergence right here, right? And look at the RVI, okay? Now, there's not always going to be a dot, but most of the times. Now, when the RVI is in the middle, and this is what we were talking about yesterday, when it's usually in the middle of this, okay, it doesn't go overbought and you start to see the dots, I don't like to trade them. I disregard them, okay, because it's more of a chop, and that's what you're seeing. But then RVI gets oversold, you have a dot here, you have a little bit of here, you really don't see that much divergence, but you have the dot with oversold conditions, and look at the rally the market makes right here. Divergence, right? RVI dot here, divergence, boom. Look at the pullback, good for a point or two, right? Here, look at where the dot is, right? It's a green dot, but where's our RVI? It's in the middle, right? I don't like trades like this, even though in this one actually failed, right? So here we have another dot oversold, and the market kind of pulls back. But again, there's no divergence showing, but on the bigger picture, or under the hood, it can release the dot. But if I don't see a clean divergence, I'm not going to take the dot, just so you know. Okay, I want to see where a lot of things match up. Here, we actually have a little bit of divergence here. Up here, this is showing you another divergence, but no red dot. Okay, again, the red dots and green are not going to show up all the time. But look at the reversal. When you see these back to back, maybe double tops, stuff like that, then usually you can look for a pullback. One more thing, that bell, if you can hear the bell in the background, it's an alert letting you know when there are dots or over these arrows show up. And I have them set up so it only shows the last two arrows for both of them. If you want to see more, go into study. It's this RSI divergence. Go into study, and at the very bottom, cross count, you could show more, right? Let's say you want to see the last 8. Click OK, apply, and now it's going to show them all, okay? So we'll go back here and put this back down to 2. It's the cross count. And then it just keeps my chart very clean for me, okay? So I hope that helps. So like right here, you have lower high, right? Maybe this is a positive divergence, right? Where, hey, watch for potential rollover, and your stop would go right above here. Same with the dots, okay? Here, so this dot, while this dot might have been made right here on this candle, okay? But while this candle is still being formed, you need to wait for this candle to kind of be done with it, right? For that dot to to confirm. It's only one candle, right? So while this candle's forming, you might see the dot appear. If it goes up, it might disappear. Wait for this candle. The minute this candle closes, the dot will appear. It'll stay there. It will not disappear again. And then what you could do is maybe look for a retracement back up for a better price. Okay, maybe look for a retracement back a quarter or half, and then your stop goes one tick above this highest candle. Okay, so maybe even if you got in here, you still were able to pick up maybe 1 or 2 points. Okay, so from 9 all the way down to 7. That's a 2-point move. Okay, but again, use the highs as your exit. That's the way I like to personally use them, right? Now, down here, you could see this dot appeared down here, but there was no shown divergence, right? There wasn't any divergence. I didn't take this because I didn't see the divergence, but what happened was the buyer stepped in. What you could do is when you start to see a candle or it breaks back above, right, the highest of this candle, that could be your entry, and your stop would go below here, and you could have picked up a nice runner. Okay, and you'll see this over and over. Just kind of back test it like this. So here, this candle, okay, probably right when this candle formed, you saw it formed. Maybe just enter there and ride the short down. Look for 1 point, and your stop would be above the highest point. Not above this, but see how this high right here is right there? Just 1 tick above is your exit. If it gets above, you don't want to be in the trade. But again, you're maybe risking about anywhere from 1 to 3 points usually, but it's usually around 2. Again, a nice reversal candle, that's the other thing I look for. I look for reversal candles to enter, right? So maybe this is forming, right? The minute this enters, boom, I go short. I know my stop is here. Also, it's a nice, clean reversal waterfall from the book I believe I sent you, right? The on the waterfalls, higher lows, boom, price breaks. That becomes your exit with the dot, with a nice hammer, and you just kind of hold, and you could pick up your 1 or 2 points. You're done trading for the day. So you'll see these dots over and over, just nail highs and lows. But again, you got look at the low of this, right? All these dots you're not going to play because of where the RVI is, right? We're in the middle. But then we get way oversold. Right here, we have very clean divergence with the dot. You want to enter on that dot, your stop goes below there, and look at the run you could have had. Okay, now here, again, RVI in here, this becomes more of a market awareness, where this was just a rally straight up, but this was also overnight, it looks like. So you will have times where even though you get the divergence, it doesn't work. So remember, you want to look for support, resistance levels, Fibonacci's, all that to tie into this. So I hope that kind of helps. The other thing is, and remember, these dots are the same. The other thing is this red and blue line, right? Now on this, I don't have the colors, or the candles colored, just because, like I think I emailed you where they were all blue, all red. If you want that, let me know. I'll send you another code for that. Okay, and what I'll do is I'll actually send you a second chart with that code, which is going to be this code right here. It's DMA, double moving average, with RVI combined. And what that'll do is it'll actually color it. Okay, and if I take out this code, right, you'll see, and then I just need to go into studies. appearance, and then just change all these the same exact color, like this, right? Just come down, and what this will do, and I'll send you a separate chart with only this one code and the RVI and the dot, so it'll look like this. Okay, and you still get the where when the market gets overbought or oversold, the green arrows. Okay. So, but for some reason with the latest release, it doesn't show them all. Like these were red candles when it got overbought. It's not showing it. Let me see, because we got to take this guy out. That's why. I believe, and it's still not doing it. Show cloud. Yeah, for whatever reason, it'll show when it get for some of them. Why? It's something that to do with Thinkorswim and all that. Their latest codes and all that. But real quick, if you remember, I said we got double RVIs working, right? Look at what price did. You actually got a red dot with it, and it kind of pulled back. You could have gone like maybe a point. Now, playing this double moving average line, right? It's set at 8 and 21 double moving average for the 512 tick chart. I believe it works great. Okay, and what it does is when you start to see price, it changes, right? When the line changes, that's when they cross and confirm. The very first pullback, I look to be a buyer right here, and you'll see right here. Okay, when price is away from it, there's a bubble that will tell you what that price is. Okay. And then what happens is the very first, just have a pending order and look for a bounce. Your exit is when it turns red, the candle turns red, stays red, and the very next candle is red too. That's your exit. Usually you're risking anywhere from 2 to 3 points. Now you can look at to buy after breaks, try and get a better price, and then a bounce. But usually the very first touch, when it breaks out, very first touch is a buy. Very first touch of a red is a short. So if you have the pending order there, okay, and you'll see it over and over and over. Here, we rally above, right? Price is away from it. It pulls back, very first touch, and the bounce. Again, these are, look for 1 or 2 bounces, stuff like that. Point bounces. Here, red, go short, boom. Okay, so you'll see just kind of how everything ties in. Now, remember, they're 2 totally different trades, the RVI dots and this, okay? This is on the pullbacks. The dots are on the extensions. Okay, so what it does is it keeps you engaged in the market, so you're not just looking for when price goes one way or the other. Okay, you're not looking for just waiting for that one trade setup. Now you get multiple, right? So it doesn't matter if price is kind of pulling back, you have an order for pullbacks. If it gets too far extended, you have a trade type for that too. So it just gives you more of an engagement and helps keep you kind of extended. So I hope all that helps and all that. And I'll email you the 2 codes. I'll send you 2 different charts. One will just be like this. The other will be the other chart, and gives you something to do for the weekend. So I hope that helps. I'll talk to you soon, and just give me a call anytime with questions. Talk to you soon.